Okay, in the next section I want to talk a little bit about how the Canadian government's likely to handle this situation in the future. There are basically three broad scenarios that we foresee, and I'll just go through each one of them in turn and talk a little bit about each one of them as they come up. So the first option available to the Canadian government, or some level of Canadian government, is outright default. That would be a disastrous scenario for a bunch of reasons. The largest owner of Canadian government debt is the various pensions in this country, and so if the Canadian government defaults to them, there's going to be a domino effect, and they're going to default to all of their pensioners, which will have obviously knock-on consequences to the Canadian economy. There's going to be a crash in the value of the Canadian dollar as foreign lenders see that we're a much more risky place than they believed we were, which actually would benefit exporters and those companies that make most of their money abroad and spend most of their costs in Canada. So there are winners and losers in the default situation, but in the main, it's a terrible nightmare scenario. The government knows that, and therefore I believe the probability of a default of that type is relatively low, but we have to keep it in mind. So that's scenario one, the default possibility. Scenario two is the government's going to respond to this debt situation with a combination of austerity and higher taxes, which is obviously going to harm the Canadian economy. When I say austerity and higher taxes, what I mean by that is if you are relying on the government for some kind of income, that's going to get squeezed, and if you make any kind of money to speak of, you're going to get taxed at a higher rate. So that's the scenario where we own up to our debt and sort of try to pay it off with tax revenue and with decreases to obligations from the government to individuals. The third scenario, and this is probably the most politically palatable scenario, is to obviously inflate away the debt by driving down the value of the Canadian dollar. So if I borrow $1,000 from you and I pay you back $1,000 that's worth less than $1,000 in terms of purchasing power, I've technically not defaulted on my debt, but you've gotten kind of screwed in the process. So that's the third scenario where the Canadian government actually maintains its payment system, but it is repaying its obligations with less and less valuable debt. Now, on a completely unrelated note, we have a Tangerine bank account, and I think we posted some stuff about this here, but I just want to be explicit about it. We have a Tangerine bank account that has a key associated with it, and if you were thinking of opening a bank account, please use our key to do that, because if you do, when you open your Tangerine bank account, you get $50 or $75. I think they've got an extra $25 they've given you, and we get $50 or $25. We love providing this content, we love doing it, but if we could subsidize the costs of doing it somewhat, we'd very much appreciate it, and this is a sort of win-win way to do that. So you guys benefit by opening a Tangerine account, making yourself $50 minimum immediately, and we benefit as well. So thank you very much. The key to that will be in the list in the link below.